Hey everybody, this is Jim at SP500chart.com using time-honored techniques to understand modern markets, featuring daily technical analysis videos of the S&P 500 index. This video is being done on Saturday, January 28th, but it's dated Friday, January 27th, because I think for the sake of simplicity, I date these videos based upon the last trading day. So we're going to look at the week, and we're also going to look at what's been going on Friday in the latter part of the week. And before we do so, I just need to remind you that the website and the video are for educational purposes only. Nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy that draws lines on charts. Okay, here is the quandary I see in the markets as we're looking at a 30-minute chart. We've got, and I've pointed this out a couple times, the markets have really, the S&P has really made a series of parallel channels here. The last time we were in a downward leg, it was a parallel channel, upward leg, parallel channel, downward leg, parallel channel, and now we've just kind of come out of this at a slightly different pitch, not as reactive. And the question is, are we in an ascending wedge, which would be bounded by this top red line and this bottom red line, or are we in another parallel channel, and this is the bottom line of that? It's really hard to know. And I'll tell you why. I see that this line is apparently having an effect on the way things traded, particularly what we saw on Friday, but the 27th. But I'm not seeing the kind of the kind of expected action that would come out of this pattern. Okay, I had to take that phone call. That was my wife. But anyway, look, we're talking about the possibility of this being an ascending channel that is roughly parallel versus an ascending wedge, and I think sometimes you get a little bit of mixed signals in the market. And I will say that where this top came in here a little into the low 1330s, that was at an area where we were expecting resistance, and we'd been calling that for a while, and that was something that definitely worked this week as we looked at that. I was thinking low 1330s to mid 1330s. It didn't quite make it up there to that 1336 mark, but clearly you could see there was a cluster of resistance there, and the market reacted as one would expect. Now, the question I have, now that we have clearly gotten underneath this potential rising wedge line, is this the thing that's going to set the markets off into a leg down now, or are we still going to go up, but in a parallel channel defined with this line that I'm now highlighting as support? And what makes me think this could happen is the fact that when our little rising wedge line broke, it did not really do so with much well, what's the word I'm looking for? It just kind of the market just kind of ignored that line. In other words, it's like it's okay. Think of it like this: these trend lines often work like a tipping point, or what some people might call a pivot point. And what happens is there's a point where the markets are going up because there's more net buyers than net sellers, and then it starts to go down. But at this point where it breaks, it's almost like the market reaches a tipping point that starts a cascade of selling, and that cascade of selling, when you come out of one of these rising wedges, often does so in fairly dramatic form. But this just kind of meandered over this line again. So it's making it look as if this is not really, nothing really happened here, if you know what I mean. So it's like, okay, think of it like another way. Think of it like this is a speed bump. And if you were expecting a speed bump to have an effect, and you saw a car coming over it, and all of a sudden you realize there was no actual bump, then it makes you wonder, well, is how important is this rising line? The good news is this line is so close to the this channel, this potential parallel channel line, that there's really it's not like, did this break? Well, gee, we'll know 50 points lower. No. Did this line break? Is this important? Well, if it is, then this will also break. And if it breaks, it'll break about, 4.5 points underneath the close on Friday. So it's like not a huge amount of distance to go before we get some confirmation that maybe we are in fact going to head down. So there you have it. We saw a couple things that were interesting this week. Again, the real story was that until Friday, this rising wedge pattern was working quite well. We also, as I mentioned, hit expected resistance up here that we'd been talking about for a while. And we also have this little pattern right here that served as something of a bull flag. It's interesting to note also that where we had that little bounce here at 1312 is right where that little right where this little bull flag broke out. So we'll just have to wait and see, guys. I hate to say it. I wish I had something a little bit more definite. You can see, though, when I mentioned that this rising wedge line at least has one technical thing that makes it look like it is having some effect, even though the breakdown was almost unnoticeable in actual market action. I can tell you that little rally we had late on Friday stopped exactly on a back test of this line. So, I think this is having some effect. I just don't think it's having as much as I would have thought. So, we still have this area of resistance up here. Okay? If the S&P was to mount another attack on this line and get over it, then I think that is a real wake-up call for bears, because that really should not happen if we are expecting significant declines from this point. And the reason is that line is drawn over the Head and Shoulders top from 2007 and the Head and Shoulders top from 2011. And if we get over that line, then I think that's a signal that the market is going to keep going higher. And it would not surprise me if that does happen, that we go so high as to even test these highs of 2007. That is quite possible. But, on the other side, and this is long range again, that is if we get over this line. If we don't get over this line and the market starts to sell back down in a big way, then we have another line down here that'll be around 1100 that is equally as important if we get there. Of course, it would probably be some time before we ended up down there. So you can see these are very interesting times. Clearly, I want to show you that we have a couple milestones here. We need to show you that we are now clearly well above the Head and Shoulders neckline of that 2011 Head and Shoulders top. Additionally, if we go in on a 4-hour chart and we draw a trend line from the top of the head to the right shoulder, we're above that. and you can see where the market, where the S&P kind of went up and down over this line, and so it's really, really interesting what's going on right now. And finally, there are a couple of larger channels as well that I think I might need to go to a 2-hour chart for this. Yeah. Right now, we've been talking about this as being our potential little channel or our rising wedge. Ignore these lines, they've gotten all screwy. But I think there's a possibility that we may be even in a larger pattern that is bounded by these green lines. The green line here, this rising support line, and this resistance line. Now, for all practical purposes, I don't think we need to worry about this line anymore, because once we broke down underneath this red line, we have not been able to get over that, and that's pretty typical. So I think we stay underneath this red line in any event. So if we get on up to that 1380, which is our target from this inverse head and shoulders pattern, there's the left shoulder, head, right shoulder. If we get up to 1380, I think that will likely happen without breaching this red line right here. So guys, this is just way, way, way interesting right now. And again, to put this in perspective, we are very close to that important resistance line that if it does get taken out, I think it signals more gains ahead. And this line now that it looked like we may be heading for back in late December, I mean, we were closer to this line than we were this top line up here. You know, at that point, it looked like we could really be in some deep weeds. But now the market has recovered, and it's looking more bullish now. So anyway, we've got to watch this cluster of resistance, see if this pattern can make that 1380, excuse me, see if it can make that 1378, 1380 target. So there you have it. That is the S&P, I call it weekly update. We took a little bit broader look at the markets here. But going into Monday, what I'm looking for, again, is see if we can stay above this line right here. Which means if Monday gets down below 1310 at any point, then I think that we can safely call this leg up over. At that point, I would expect a move likely to the 1270s as an area where we should find some support. And we've got a couple reasons to believe that. But we'll talk about those if and when we get there. So right now, very interesting market. Very interesting to watch this unfold. I appreciate you taking time out of your day to watch this video. And I also really appreciate those who have subscribed to SP500chart.com. Let me briefly tell you what that means. If you are a subscriber for $19.95 per month or $189.95 a year, you get a daily technical analysis video delivered after the close on each day of trading. And there will be an occasional time when that becomes impossible to do, but so far I've done it every day, and I think I've only missed about 10, maybe 12 days in the past 15 months. So you get that video every day on a non-delayed basis. But you know something? In the interest of fairness, I release all of these. Excuse me. Got some sinuses that are just killing me. Yeah, you needed to hear that. So anyway, all videos get released eventually with either a 1 or 2 day delay, because I want everybody to judge for themselves whether or not this works. Because the last thing I want to do is, even though $19.95 is pretty cheap for something like this, if it works, you can see that it works. You get the release of every video on a delayed basis. You can go back and say, is this guy full of hot air, or does this work? And I think it must be working because more and more people keep subscribing, and it's been quite good, actually, much better than what I had envisioned when I started thinking about making this a subscription site last fall. But that aside, just think about it. If it works, why not take advantage of it? Learn some of these techniques for yourself. Again, I don't offer this as investment advice. I offer it as an exercise in trying to understand if these patterns and trend lines actually work. And so far, we've seen a lot of working patterns and working lines, but you have to make that decision for yourself. At any rate, whether you're a subscriber or not, thank you for your time today.